everyone, and welcome to our YouTube channel. The oscillator has long been one of the most popular indicators among traders, thanks to its ability to signal potential reversals and reveal the market's momentum. But here's a question for you. How do you usually trade with momentum indicators? Most of us tend to focus on overbought and oversold zones, patiently waiting for the right entry with the hope of catching a reversal. Let's go to this situation. You're trading with an oscillator, and you notice momentum has dipped into the oversold zone not just once, but several times. Naturally, you believe the market is about to reverse, so you place a buy order. But instead of bouncing back as you expected, the price keeps falling, leaving you confused and frustrated. I'm sure you've run into this before. Momentum hits the overbought zone, so you jump in with a sell order. But instead of pulling back like you expected, the price just keeps pushing higher, leaving you caught off guard. So the real question is, how can we improve the accuracy of momentum signals so that when a buy or sell setup shows up, it actually looks solid and reliable, just like this one here? So what's the solution? It's simple. We need a confirmation factor to back up the signal. And what's the confirmation we're talking about? It's the momentum confirmation coming from the higher time frame. And that's exactly where MagnetOsc Turbo comes in. The indicator you're looking at on the chart right now, that's MagnetOsc Turbo. So what does this indicator actually offer? Well, first of all, just like any other oscillator, it identifies signals based on the overbought and oversold zones. Next, you'll notice a yellow plot line on the chart. That line represents the momentum of the lower time frame, in other words, the exact time frame you're currently looking at on your screen. Next, you'll notice a yellow plot line on the chart. That line represents the momentum of the lower time frame, in other words, the exact time frame you're currently looking at on your screen. Now, take a close look at the screen. You'll notice a green block showing up. That block represents the momentum of the higher time frame. And when you see it turning green, it means momentum on the higher time frame is sitting in oversold conditions. On the flip side, when you see a pink block appear, that tells you the higher time frame momentum is stepping into overbought territory. As you can see, with just a single oscillator, you're not only keeping track of the momentum on your current time frame, but also capturing the momentum of the higher time frame at the very same moment. Now, let's talk about the signals. This indicator provides you with two main categories of trading signals. The first one is called the pull signal, and it comes in two forms: up pull and down pull. The second type of signal this indicator provides is called the push signal. Just like the first group, it also comes in two forms: up push and down push. The name push and pull are inspired by the behavior of a magnet. And once you see how these signals play out on the chart, you'll immediately understand why they were named this way. Let's start with the mechanics of the push signal. To validate a push signal, the indicator looks at momentum across two time frames. Right now on the chart in front of you, you can see the yellow plot line. That's the momentum of the lower time frame sitting in the oversold zone. Next, if you take a closer look at the chart, you'll notice a green block showing up. That tells us the momentum on the higher time frame has also entered the oversold zone. So at this moment, both time frames, the lower and the higher, are aligned in oversold conditions. But it doesn't stop there. When both time frames drop into oversold, the indicator won't fire a signal right away. It waits for a strong bullish candle, and once that candle appears, that's when the up push buy signal is triggered. Next, with the down push signal, the process works in the opposite way. Here, the indicator detects that momentum on the lower time frame has entered the overbought zone. Then, a pink block appears, signaling that the higher time frame has also entered overbought territory. At this point, the indicator patiently waits for a reliable bearish candle to trigger the down push sell signal. With this mechanism, you've already seen why it's called a push signal. When momentum from both time frames aligns, they act like two magnet poles in resonance, generating a powerful thrust that creates reversal signals. Next, let's dive into the mechanism behind the pull signal. The mechanism of the pull signal is different from push. On the chart, you can see that the momentum of the higher time frame has already entered the overbought zone, highlighted by the pink block. Conversely, on the chart, you can see that the momentum of the lower time frame, the pink plot, is in an oversold state. In such cases, momentum often tends to align with the higher time frame. At this moment, a pull signal is triggered when the lower time frame momentum breaks out of the oversold zone, ready to surge in alignment with the strong upward force of the higher time frame. Conversely, for a pull-down signal, the appearance of a blue block on the chart indicates that the higher time frame momentum has entered the oversold zone. At the same time, the lower time frame momentum is sitting in the overbought zone. This suggests that the smaller time frame is likely to align with the larger one. As the higher time frame shows strong signs of weakening, this becomes the perfect moment to leverage that bearish momentum and take a sell entry on the lower time frame with the down pull signal. In this sense, the pull signal works like the magnetic pull. When two opposite poles meet, they naturally attract each other, just like the smaller time frame is drawn to follow the direction of the larger one. Next, knowing how to use the indicator effectively is just as important as understanding its mechanism. First, to select the higher time frame, go to Settings. In the Parameters section, you can adjust it to any type you prefer, such as tick, minutes, or range. Here, I'm using the 2-hour time frame as the higher one. You can also switch to 3 hours, or even 4 hours. In practice, combining a 2 to 4 hour chart with the 1 hour chart usually provides a well-balanced and effective setup. Next, although there are two types of signals, we should never trade both pull and push at the same time. In the settings under alerts, both push and pull are enabled by default. If you only want to focus on one type of signal, such as push, you can turn off pull. Instantly, all pull signals will disappear from the chart, leaving a clean view with only push signals for your trades. On the other hand, if you turn off the push signal in the alert section, only pull signals will remain on the chart. This way, your chart will fully focus on the pull mechanism, making it easier to observe and analyze without being distracted by both types of signals showing up at once. So why do we need to do this? Who is each signal suitable for? The push signal is suitable for traders who like reversals, seek higher rewards, and prefer holding trades longer. When both timeframes confirm overbought or oversold conditions, it offers the chance to catch turning points. However, since push works differently from pull, using both at the same time can create conflicting signals, leading to confusion and noise in decision-making. On the other hand, the pull signal is more suitable for traders who prefer taking multiple trades, don't like holding positions for too long, and would rather avoid the risks of reversal setups. Instead, pull focuses on joining the market once momentum is already strong, allowing you to trade in sync with the dominant higher time frame trend. Thank you so much for watching today's video. I truly hope these insights give you a fresh perspective and help you trade more effectively. If you found this video valuable, don't forget to hit the like button, subscribe to our channel, and share it with your friends or fellow traders. Your support means a lot and keeps us motivated to create more content for you. See you in the next video, and as always, happy and successful trading.